Welcome to Cryptocurrency Investing for Dummies book reading. I'm Kiana Danielle, CEO of Investiva and the author of Cryptocurrency Investing for Dummies. And I'm going to read my favorite parts of my new book, Cryptocurrency for Investing for Dummies, just like the way authors do when they go to book signings. But because I can't go to each and every bookstore around the world to do a book signing for you guys, I'm going to simulate a book signing experience for you through YouTube videos. Today, I'm going to read a part of chapter 3. Chapter 3 is about risk. It's called Recognizing the Risks of Cryptocurrencies. I'm actually going to skip through reviewing cryptocurrency returns and risk flipping the other side of the coin. I'm going to actually read for you page 36. Glimpsing cryptocurrency's reward versus risk. Reasons the cryptocurrency investing became such a hot topic in 2017 was the crazy surge in the value of major cryptocurrencies such as Bitcoin. Although you may have heard of Bitcoin the most, it wasn't even among the 10 best performing crypto assets of 2017. Bitcoin's value grew by more than 1,000%, but other lesser known cryptocurrencies such as Ripple and NEM were among the biggest winners, with a whopping 36,018% and 29,842% growth, respectively. Where did Bitcoin stand on the performance list? 14th. These returns made investors and non-investors alike super excited about the cryptocurrency market. By the beginning of 2018, almost everyone you knew, your doctor, your ride-share driver, perhaps even your grandmother, was probably talking about Bitcoin, whether or not the person had any experience in any sort of investing. I know my 8-year-old nephew was asking me about it. However, as is true of any type of investment, what goes up must come down, including the cryptocurrency market. Because the cryptocurrency prices had gone up so much, so quickly, the crash was as hard and as speedy. For example, by February 2018, Bitcoin had dropped to the 3-month lows of $6,000 from the highs of nearly $20,000. That's crazy. The cryptocurrency then started to consolidate above the $6,000 support level, forming lowering highs, as you can see in figure 3.1. I don't know if you can see the figure. So we have the lower highs over here. This is Bitcoin versus US dollar. By support level, I'm talking about a price that the market has had difficulty going lower than in the past. In this case, the price had difficulty breaking below $6,000 back in November 2017. Lower highs are those mountain-like peaks on the chart. I don't know if you can see it again. So we have lower highs here. Lower high, lower high, lower high, lower high. And even lower, right? Every peak or high is lower than the previous one, which indicated a decrease of popularity among market participants. I talk more about support and its cousin, resistance, in chapter 60. Many analysts considered the great appreciation of major cryptocurrency value to be a bubble. This fluctuation is a heck of a roller coaster ride in such a short period of time. The returns were great for those who invested early and took profit at the highs, but just imagine investing in the market where the prices were up and watching the value of your investment going lower and lower. That is one of the major risk factors in any type of investing. So after this I've done up to page 37. After this, I go to digging into different kinds of risk, including crypto hype risk and so many other things. And then I talk about exploring risk management methods. That's it for chapter 3 in part 1. Thank you so much for watching the video. Don't forget that you can get a free copy of Cryptocurrency Investing for Dummies just as long as you pay for the shipping, which is not that much. It's still going to be a lot cheaper than the book itself on investiva.com. I'll share the link down below this video. And once you just pay for the shipping, I will send you the physical copy of this book wherever in the world you are. I hope you enjoyed the reading of Cryptocurrency Investing for Dummies, and I'll see you in the next video.